save in assets that appreciate rather than save in currency, which depreciates. And you can see that instead of measuring the dollar's value against the dollar index, a basket of crummy currencies that continually devalue against the dollar, let's measure things in gold. And any asset you can think of, if you go back probably to 1971, but go back 25, 30 years, any asset, house, car, jewelry, well, jewelry is bad because it's gold, but any asset, any main asset, in particular, your home, the S&P, anything, the bond market, it's all of these things are falling in price in ounces of gold, but going up in values of dollar. Like if we go back 25 years ago or 20 years ago to 2005, the average price of a house was $240,000. Gold was $450. It's about 500 ounces, just over. If you look at the house today, it's doubled in price. It's about $500,000 average across the country, just under 450. But that 240, it's doubled, did well, right? Your house doubled, great. But the 500 ounces of gold that you could have used to buy that house, instead you stuck under your mattress earning nothing but dust, no interest for the past 20 years, but it's worth $2 million. It buys you 5 houses. So in dollar terms, your house went up by double. In gold terms, that house fell by 500% in terms of its value in real money versus currency. These are the things that you teach, and these are the things people need to understand. That's what should have been in the curriculum instead of, silly things that they teach.
According to Andy Schectman, everything measured in gold and silver terms is collapsing in value. A house that doubled to $500,000 actually fell 500% when priced in gold. What cost 500 ounces now costs just 100. As stablecoins function as CBDCs, creating synthetic treasury demand, physical metals offer the only escape from programmable, tracked digital currency. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
So who are you? What'd you buy? Where'd the money come from? All of these things are now part of a blockchain ecosystem. It's frightening if you think about it. It comes into effect very, very soon, but it is diabolically genius. Synthetic demand for the U.S. Treasury anytime money moves around the world. Interesting thought, to say the least. Let's shift gears a little bit. When I come on your show, you and I talk about gold a lot, and we've talked about, since the day one I've been on your show, that central banks have been net buyers of gold over the last several years. Now, some of the largest pools of money in North America, in the United States, have been buying gold and standing for delivery. What do you think they're really signaling, whether it be the central banks or the big money here in the United States? And I know what I think, and I think you know what I think, but why do you think that the retail public has largely ignored this move in gold and silver, despite the most well-funded and well-informed traders on the globe, the central banks, and now even those big traders in the United States, saying there's something really much bigger than meets the eye here with gold and silver, with all of the accumulation and all of the repatriation and all of the deliveries? What's the retail public missing, and what are these big money people saying without saying?
So yeah, there's a lot there. So a couple things. I think what central banks are doing is they're realizing that the petrodollar isn't going to last much longer, and it's going to continue to debase. So the US dollar is going to continue to lose value. We weaponized it under the previous administration. That was a very dangerous move. To me, it looks like something that was either intentional or they had no idea what they're doing. One of the two, because it's not something you would just happen upon. And what that really did is it showed the world that, using the Western system, we have the ability to take your money from you. And so, that didn't start it, but I think that accelerated it. What you see with central banks is they're now going net long on gold. Not net long. They have more gold now than they have US dollars. And we haven't seen that for a very long time, and they're starting to buy more and more. We've seen acceleration, especially in China. What that's telling me is that gold is starting to become the next, let's just call it world reserve currency. so to speak, at least on the settlement side of things. The dollar's not going to die. It's going to continue to lose value over time. Eventually, we get to a $50 Coca-Cola or maybe a $100 Chipotle bowl, something along those lines. What I think retail's missing is this. I think Bitcoin has done a very good job of pitching itself as digital gold, and gold is a shiny rock to a lot of sophisticated buyers. And I think a lot of those people have kind of stayed away, especially in the younger group of people.
Yeah, and I've been talking a lot about that. It is diabolically ingenious, and it is creating synthetic demand for 90-day or less U.S. Treasuries, which keeps interest rates low, which funds the government. Now you don't have to worry. Everyone freaks out about the new Federal Reserve Chair, who can only control the federal funds rate. Well, if you have the Genius Act, every time money moves, whether you're buying a pack of cigarettes or a new house,
Yep.
it drives down short-term interest rates. And the interesting part about it too, of course, and I don't know if you have any comment about the Clarity Act that says the interest on those treasuries, if I owe you $1,000 and I send it to you, a stablecoin is created backed by short-term treasuries. When you receive it, stablecoin is burned. Doesn't look any different in your bank account. You got $1,000 from me, but the interest on that treasury that was used to back it is not transferable. Companies like USA Tether, they're loading up on gold. They already have 14 billion in gold, the largest stockpile of gold outside of central banks, in a way to devalue the dollar. That's been my thesis. So, any comment on the lack of transferability of the interest on it? Do you have any ideas on that?
Yeah, I'll give you a couple ideas on it. So one, that's how Tether makes its money, right? That's where they're making a lot of their money from, is that arbitrage of interest rates. So that's why they're in the business. That's why they're doing it. Now, why are they buying gold? I think they were foreseeing what was going to happen in some of the crypto markets with value going down. Some of that may have to do with the halving cycle. Some of it may have to do with what we're seeing in a capital rotation into the precious metals right now. And in addition to that, Andy, they wouldn't be buying gold if they didn't think it was going to go up. And they also wouldn't be buying it if they weren't seeing themselves as a central bank type facility. So central banks are buying gold. I think that's one of the reasons they're doing it. Now, that interest that's going in there is how they're creating their money. Now, there will be, because it is a blockchain technology, you will be able to see that you own a certain amount of those tokens. For example, someone can't just steal them from you. Per se, there's ways you'd need to protect it. But what we don't necessarily have is transparency into, is it really one for one? Has Tether been audited yet? Not to my knowledge, to where a third party's been able to really go in there and see it. Now, I think they have some third parties that probably do it, but has it been from a government? Has it been from another, institution?
Certainly would have been a good understanding. I mean, these are the things that people should learn early on. And then if you taught the concept of interest, the law of 70 seconds, letting interest be your friend instead of fighting against it, as most people do, understanding the concepts of indebtedness and not being in constant servitude to indebtedness, understanding the compounding of time, and in terms of investing, not just compounding of interest, but compounding of time, stacking sound money, a way to break free from the inflation, the insidious hidden inflation, the tax on all of our savings. These are things that I think everyone should understand. And in fact, if I were in charge of high school curriculum, even elementary school curriculum, the first things I would teach would be the laws of compounding. The law of 70 seconds. Take the interest rate you're being charged, divide it into 72, tells you how long before your principal doubles. So little things like this that you could instill in people all the way through elementary school until you're done with high school, and even into post-secondary, would make things much better for people, I think, as they go off on their own and try to navigate the world themselves. The best gift I was ever given was when I started my company, and my father at 19 years old said, "You'll buy something, I don't care if it's 1 ounce of silver, every 2 weeks when you get paid, or I'll fire you." Well, that was 36 years ago. He won't fire me anymore, but I've honored that promise, and I bought every 2 weeks for 36 years. The laws of compounding, understanding the value of real money. What role do you think physical metals play practically in this environment for everyone, not just people who are stackers, but for regular people who might be hearing something like this for the first time and say, I don't own any gold. What role do metals play in that environment where everything seems to be moving away? As a side note, I just went skiing in Vail. Now, Vail, and I usually go up to Whistler also in January when I speak at the Vancouver Resource Investment Conference. First year I didn't go there, and many, but they're owned by Vail. I'm from Minnesota originally. The little hills there, Afton Alps, owned by Vail. Vail owns all these ski resorts all around America. They're one of the largest companies in the country. They're cashless. So when we're transitioning slowly to a cashless environment, a programmable, a digital environment, where once you're in it, it's pretty tough to get out of it. What role do gold and silver play in that respect for you and for everybody out there?
It's a great question. I'll throw this out there too. You can cherry pick times and dates and highs and lows to figure out which asset beats out other assets all the time. But what I will tell you is when I got married in the late 90s, and if I would have put money into gold in 2000 and just sat on it, I would have a tremendous amount of wealth versus more wealth than I have today. And it wouldn't have taken me working my tail end off trying to trade stocks, build companies, get involved in real estate. It would have just sat there and continued to gain. I think that's going to continue happening going forward. And the reason for that is we haven't gone back to backing our currency with gold. Therefore, I believe we're going to continue to debase it. And so if we're living in a world where currency is going to continue to be debased against real hard assets or money like gold and silver, then I think what's going to happen is the reason to hold it is it's what we already talked about. It's how you grow your wealth against everything else. And so, I'll just throw it out there. We don't know if there's going to be a time where we're ever restricted on how much gold we can own or how much we can buy or how easy it is to acquire it. Right now, you can do all of that. In the future, maybe the stablecoin isn't allowed to go into too much gold and silver, or it's limited to how much it can go into. Like we talked about, if it becomes a mechanism of economic, I don't want to say manipulation, but economic tools to kind of keep the economy going, they may not allow you to put it into things that can become savings. They want you to spend it to keep the economy going, for example. And so if we're in a time period where they don't want you to save, we could be limited on how much you can move that into. So to me, getting a stockpile of gold and silver right now makes a lot of sense. It's kind of ahead of the game. I think everybody would benefit from doing it.
When you talk about putting a timestamp on the CBDC, what you're in essence saying, and just to clarify and make sure I'm understanding you, you're talking about in essence inserting monetary policy into the currency. In other words, monetary policy is that we need to maybe get a little inflation into the system. We need to heat things up a little bit. So we're going to give everyone money, but you need to spend it now. And if you don't spend it over the next 30 days, it goes away. Is that in essence what you're saying?
Correct. So, and just to back up a little bit too, with AI coming on, the tool that my company has, we try to empower people so that they are able to be more efficient and effective and keep their positions and do all that. Other companies are basically replacing people with AI. AI is no doubt going to be very disruptive. So is robotics over the next several decades. As that happens, there's something called universal basic income that has been pitched out there that will probably happen, which is going to be similar to a pandemic stimulus payment. Okay. So to what you're saying, Andy, it's possible that everybody might get $1,000 a month, for example. That $1,000 can be earmarked and it has to be spent within a certain period of time. And it may have to be spent in a certain place. So for example, it could be forced to be spent at a grocery store. Or it has to be spent on Amazon.com, or it has to be spent to pay your utility bills, and it could expire at a certain point. Because of those kind of mechanisms that are in there, it can be difficult to, say, sell a house, take a bunch of stablecoin, and then if you want to move it into precious metals, we don't know what that's going to look like. Is there going to be any restrictions on it? Do you have to do it within a certain period of time, or is it not a big deal? Right? We don't know yet. but it's programmable, which means that they can program it. So it can become a economic tool. It could become a stimulating tool. It could be a tool to pull back if the economy is getting a little too heated, meaning they'll give you extra savings or a percentage return if you don't spend it, but you save it. So the mechanism can go both ways. And so it almost turns every person into a little central bank, so to speak.
Brother, I think that man has been in search of gold and silver for 6,000 years. It's in our DNA, and you do feel it. I always tell people that's why gold has been money for 5,000, 6,000 years. You put it in your hand, you feel it. There, you can't. It's unmistakable. Feel the energy, the vibration, the density. Interesting point. Most people don't get that far past holding a piece of jewelry where you really don't feel it. But maybe the reason you were able to get that to that place was that your family owned a bank. And maybe tell us a little bit about what you learned about money behind the scenes that most people never hear, or how that helped shape your understanding of money, sound money, real money, gold and silver.
For sure. So I'll start off with just a little bit of a history there. So my grandfather started a savings and loan in California, and if I recall correctly, it became the highest rated customer service lending institution in the country. I think it was in 2006, 2007. Um, you know, he started an organization because of a relationship that he had. And I'll give you just a little of the basis of that. So he was a mortgage broker, and he was working a lot with a real estate, professional, someone that owned a lot of real estate. And he was having a hard time getting some of the loans he wanted. And so they decided to go into business together and to go get a charter. So they got a charter for a savings and loan. They wanted to make it easier to get loans for people's homes, as well as, smaller commercial projects and things like that.